Good morning, fellow traders. This is Doug Campbell with Right Way Options, coming to you with the morning market preparation video for May 24th, 2018. So yesterday, how about a little whipsaw? Big time whiplash yesterday. We had a big gap down, come close to 200 points in a gap down on the Dow, and then we get a surprise announcement. Well, not an announcement, but we learn a surprise from the FOMC minutes that the FOMC would be willing to allow inflation to move beyond 2%. That sent the market racing back higher yesterday, and we ended up closing the day positive. Now, when you look at this chart, a couple things I want to point out here is we're really what we're probably experiencing here is just a little bit of back and forth as we bounce around inside this chop zone. Pretty wide ranged, and you can see we're remaining bullish. But, you know, it's not all that uncommon to see, after a sharp rise like this kind of back and forth and moving back over toward the trend. That may be what we're experiencing here. And it's just being fueled by this uncertainty, political uncertainty around the trade negotiations. All the tweets and all of the news reports spinning out as a result of that. We're kind of whipping back and forth between those ranges. Now, the good news is, of course, we're remaining above that 50-day moving average, and we're remaining above our trend. So nothing terrible really happened yesterday, except for the fact that you may have experienced some pain in just that ugly whipsaw that we experienced. Let's take a look at the SPY. SPY really in the same in the same boat. If I were to remove all of those lines and just quickly draw a line right across here, you can see that we're actually in pretty good shape. We held support yesterday. It looked really ugly, and all we've really done is created a consolidation zone that we're whipping back and forth in. So kind of, a challenging market to be sure. We want to be long. We want to be, very engaged in our trading. But sometimes price action becomes very, very challenging, particularly when we have all of this political uncertainty and things tossed into the mix. It's really hard for the market to determine a direction. So the good news is we're holding up well. The bad news is it's really challenging in this price action, the way it's whipping back and forth. Now, looking at this, we would definitely call that a bullish candle today. But unfortunately, when we look for that follow through today, we're not getting it. Currently, the futures are pointing to a slightly lower open. Now that could change this morning as news comes out and earnings come out and things like that. But so we're not getting follow through. Remember, a bullish candle requires follow-through, and we may not receive that follow-through today. So again, we're just left kind of stuck here in the middle, stuck between a rock and a hard place, essentially. Let's take a look at the Qs. The Qs left behind a incredibly strong bullish engulfing candle, bouncing right off of that price support on that FOMC news. But here, once again, we're not seeing follow through this morning. It looks like we're going to be pretty close to flat, maybe slightly lower on the Qs this morning. Again, the good news, we're holding trend. We're just chopping back over toward that trend. So we have a 3-day weekend coming up, and with that 3-day weekend coming up, there's going to, in this uncertainty, I would be a little bit cautious about adding a whole bunch of new risk ahead of this long weekend. It's very, very possible, and it's not atypical to see volumes start to drop rather rapidly. And we may start seeing that today after the morning rush. We may start seeing those volumes drop off as traders start to make their way out and extend their long holiday. So keep that in mind, and particularly option traders, you want to be careful of that because we could experience about 5 days of really low volumes and not much price action if that does occur. Making expirations a point of concern for your trading. Keep an eye here on IWM. IWM having been the strongest index, holding up very well after its gap down yesterday, actually finding some buyers here. I wouldn't be at all surprised to actually see this come on back here and test the support before we're done. So watch that closely. Let's take a look at the VIX. The VIX yesterday, again, whipsawed. Started up yesterday sharply. A little bit of nervousness coming into the market, and then on that rally we just dipped right back down. So we're coming very, very close to testing this long-term downtrend line here on the VIX, and if we had follow through with these bullish candles, we might actually see that occur today. But as I'm looking at the market right now, I don't see that happening, and I think we're probably going to experience a flat to a slightly lower open this morning. And again, just more questions than answers. And until that some of that political uncertainty starts to resolve, that could continue. Let's take a look at T21. 22. T21-22, the 4-week new high, new low ratio. And as you can see, I plot this on just a single line chart, simple line chart. And you can see we were up here in this bearish reversal zone, and we've pulled back, and that remained pulled back yesterday. So we do have room potentially to move higher. If the bulls get so inspired, we do have room to move higher. Obviously, we have plenty of room to move lower here. So we'll just have to wait and see who gains some inspiration today. Again, I would be really, really careful about making big sweeping trade decisions today because of that 3-day weekend. We really could see volumes begin to diminish, some light, choppy price action, really two-sided back and forth. So be careful as you plan your next couple of days. Let's take a look at the economic calendar. On the economic calendar, we have two major items that could move the market around today. First, we have jobless claims here at 8:30. Jobless claims are expected to diminish by about 2,000 according to consensus, and staying obviously very, very strong in labor demand. Existing home sales are supposed to, according to consensus, hold on to the good numbers that they reported the last couple of reports. No real change, though, in those numbers. So that continues to remain very strong. Other than that, we just have a bunch of reports not likely to move the market. We've got a couple Fed speakers yet today, and we have some bond events to make note of. But it's that jobless claims and existing home sales that have the potential to move the market. Let's take a look at earnings. The earnings calendar, we have had about 51 companies reporting earnings today, and those earnings are coming in pretty fast and furious at the moment. So watch, keep an eye on those earnings reports. And make sure you're planning your trading around that. One, this morning, Best Buy will be reporting this morning. Looks like it may have already reported and is off slightly today. Later on this afternoon, we have, I think, GPS. Yeah, the Gap is going to report later on today. So a couple notables to pay attention to for your planning for the day. So everyone, I want to wish you all a fantastic day. I want to wish you great profits today. And if this is the first time you've seen this information, please do me a favor. Click that subscribe button on YouTube, the follow me button on Facebook. Click those thumbs up buttons. That helps me out a lot, you guys. By the way, I truly appreciate everyone who does that, and all the great comments that folks continue to leave. I do appreciate that. Also, feel free to share this video with any friends and family that you might think could benefit from this information. Everyone, I want to wish you a great day. We'll catch you bright and early tomorrow morning, Friday morning, and I will talk to you all then. Take care now.